I recently came across an old but an interesting brokerage note by Motilal Oswal on L&T from February earlier this year, when L&T was hovering around rupees 3,300. The report then set a target price of rupees 4,200. Today, in July, the price of L&T is around 3,600. I believe this report is even more relevant now as some of the predicted developments are occurring and the identified trends have intensified. So let's look into the reasons behind Motilal Oswal's bullish outlook on L&T. Going through this report, I identified 5 key such drivers. The first is post-election domestic inflows. There is an expected surge in domestic project inflows, particularly in large infrastructure projects. The center capex for FY25 is projected at INR 11.1 trillion, emphasizing significant infrastructure developments. Key sectors likely to see increased activity includes transportation, rail, metro projects, irrigation and transmission. The private sector is also set to benefit from increased capex in thermal power, PLI initiatives and semiconductor manufacturing, further boosting L&T's domestic order book. Now we look at L&T's growth in the Middle East market. L&T has achieved significant growth in the Middle East market with international inflows increasing by a whopping 377% year on year in the first 9 months of FY24. This growth is primarily driven by the projects in the hydrocarbon and infrastructure space, including significant contracts with Saudi Aramco. Noteworthy projects like MGS-3 gas-based projects highlight L&T's strategic expansion in the region. The company has effectively managed risk by mobilizing resources and localizing teams to ensure timely project execution. The third key driver is L&T securing large and technically complex projects. L&T is focusing on securing large projects that require high technical qualifications. The company has consistently increased its share of large mega and ultra mega projects which offer limited competition and better working capital terms. With government capex projected to grow at a 10 to 12% CAGR, L&T is well positioned to leverage these opportunities. This strategy enhances L&T's competitive edge and positions it for substantial future growth. Moving on to the fourth driver is completion of low margin legacy projects. L&T is set to complete several low margin legacy projects within the next 2 quarters. The completion of these projects will significantly improve the company's margin and overall profitability. This shift will allow L&T to focus on higher margin projects, enhancing financial performance and freeing up resources for new ventures. Last but not the least key driver is core business valuation. L&T's core EPC business is valued at 28 times March 26 estimated EPS. The company anticipates nearly doubling the growth over the next decade compared to the last. The projection is based on an expanding market both domestically and internationally and a continued focus on reducing working capital. In summary, Motilal Oswal's bullish outlook on L&T is based on strong inflows, significant growth, focus on large projects and improving margins. If this analysis was helpful, please consider liking, subscribing and leaving a comment. Thank you.